before we get into any of the charting, I just want to make it clear that this is how I personally view liquidity. This is how I've simplified it down into my own trading, and it may not line up with how everyone else traditionally explains liquidity. If it helps you, then awesome. But if not, that's fine too. So let's get on to the video. All right, bros. What is good? Coming back at you with another fucking banger video. Today I'm gonna be explaining just a couple different forms of liquidity. Gonna be explaining like what liquidity even is, why it's important, and just like how it works in general. So how liquidity works in ICT, which is what I use, is basically retail traders see highs and lows as support and resistance. So if I zoom into here, you can see that off these levels right here, price is bouncing off of these levels and going down. If I'm a little retail stupid fucking trader, and when anybody says like retail trader, all I mean is just like an unprofitable trader who doesn't know anything about the market and is low-key just like gambling, which is what we all kind of are doing, but it is what it is. Fucking like all these highs are pushing market down. That's their concept. And if I'm shorting this market or like betting that it's going to go down, I'm going to put my stop at this low because this is where I think that price is going to like bounce off of. But obviously, as you can see, this is not how price action works. It bounces off liquidity or stop losses. And if you think about it, like a lot of other people are going to have this exact same idea of putting their stop above these, relative equal highs. And they're going to put their stop up here, and the market makers or just like big hedge fund, big capital players are basically going to see all these orders up here resting, and they're going to push the market up. They're going to take out sell side liquidity down here, and they're going to push the market up to take out all of these sell stops. I hope that makes sense, but I don't really know an easy way to explain it. But let's just get into like what liquidity even is for like my standpoint, and why it's important in the market. So there are, like, in my opinion, three different main forms of liquidity. Number one, just being regular swing highs and lows, and the more prominent the better. Now, let me show y'all what a swing is. So, a swing is just any high like this, or low like this, or this, or this. Like any swing low you see in the market, that's a form of liquidity. And obviously, some are going to be better than others, but I'll get into that in a bit. But any high or low that you see in the market is liquidity. And the more prominent it is, like this one right here, it's probably most of the time going to be a better source of liquidity than this swing low or swing high, down here. So that's the first form of liquidity that I want to go over. So the next form of liquidity that I want to go over is number 2, relative equal highs and lows. I'm mainly just saying this like relative because they don't need to be equal. Obviously, equal is going to be a better form of liquidity, but also the farther apart the two relative equal highs and lows are to each other, the better. Sorry, this shit's kind of getting crazy now, but so what relative equal highs and lows mean are basically like equal highs and lows that aren't exactly touching each other at the same point. So example, like right here. You can see that this was a really good form of liquidity. These points aren't exactly touching, but they're still a very good form of liquidity because there's going to be a lot of sell stops resting above here. Or even on a lower time frame, like down here. Well, this would be on a lower time frame, but we can see it on the 5 minute. This is a really good form of liquidity down here. This is like what fucking triple, almost quadruple equal highs. I mean, that's just so fucking sexy. Yeah, these will be like one of the main forms of liquidity you're gonna want to look at and target. And the next one is a little bit more advanced, but I still want to go over it because it happens all the time, which is LRLR. And the more algorithmic, the better, or perfect. This is kind of hard to explain. Here, let me go find a good example real quick. Okay, so this is gonna be the example for LRLR. And what LRLR stands for is low resistance liquidity run. And low resistance liquidity basically means like a stack of highs and lows that can easily be ran because there's going to be so many sellers here. Basically, with support and resistance, you're gonna see this, draw this trend line and think, oh, price is gonna keep on in this trend, keep on going in this trend, and it's like this is in a bearish trend right now, but really the market is preparing to flip. This is called engineering liquidity. So there's so many stops resting above these highs that it's very easy to sweep liquidity, like down here. You can see there's probably something over here, but this is the main form of liquidity that was swept before going higher. And it was very easily pushed through because there's so much liquidity resting above here. And this happens like pretty much every day. LRLR is super easy to spot once you kind of know what it is. Honestly, I'll show you another example. Okay, hold up. Okay, so this will be the next example right here for LRLR because it is kind of hard to, see. But basically, this is just engineering liquidity. And back to what I was saying about being like perfect or algorithmic, like when you see like 3 points touching like this, like pretty much perfectly. I mean, I don't know if it's exactly perfect, but oh yeah, there you go. Like it's pretty much touching perfectly. Retail traders are gonna see this and they're gonna think, oh, I'm gonna long this shit. Fucking boom, because we're in an uptrend. Put their stop below this low, and obviously this shit just gets fucked. And this happens, a lot. It's a very good form of liquidity once you know what you're doing. Obviously, this is just to kind of like read the market and like know where it's going. But yeah. So if you stuck around till late in this video, just know I fuck with you. You a real one on JIT. And here's some just bonus or more advanced advanced forms of liquidity. These are also pretty helpful, but you're probably not gonna like care about them until later in your trading career. So the first one is just the session highs and lows. these will always be a very good form of liquidity, especially when you're just trying to find your daily bias. Usually, price will sweep liquidity or sweep like a session high or low, and then reverse to like the other side of the session high and low, and those are usually pretty good. The next one is the high or low of the day or the week. Oh shit. The day or week or month. These are just like longer term forms of liquidity, and usually there will be like more stop losses resting above or below the higher low of the day or the week or the month, and that's a very good form of liquidity. And the next one, which is actually one of the strongest forms of liquidity, which I love to use, is data wicks. And if you don't know what a data wick is, how will I show you what a data wick is? Here's a trade that I took with a data wick on my 50K last Thursday. This was a data wick. This was on the trade recap, the 50K trade recap. If you fucking watch that shit, if you are a real one. This was a 1-to-1 R trade on my 50K. This was an 8:30 employment news wick handle, and this was an A setup. It was really good. And if you see a big ass wick like this, like here, let me show you what data wick even means. It basically means news wick. So if we go back to last Thursday, 21st, you can see that there was high impact news. If you this is also Forex Factory, this is where you should get your news. This is just some shit that I use. At 5:30 my time. I'm on the West Coast. I'm in LA, so you should be. This is 8:30. So if you look back here, oh shit, back here, this was 8:30 news. This is unemployment claims. You can see we swept liquidity before going lower, and yeah, this is just a really good form of liquidity that you should be using and should be informed about. I can tell y'all more about Forex Factory and just like how to trade news and stuff if y'all want. But yeah, this is the end of the video. Any questions or video ideas y'all got for me, just leave them in the comments. Like, subscribe, fucking, you already know the whole fucking shit. Yeah, I fuck with y'all. Later.